Video for the week beginning the 21st of June 2015. Now this week there's not too much on the calendar except there is one or two really big things coming up that are looming. I'm sure you're already aware of what's going on. Of course, the biggest thing is the Greece situation, which is ongoing. If we go to Monday the 22nd, we can see here we've got a special emergency summit of all the key players in the unfolding Greece drama. So you've got IMF leaders, you've got ECB, you've got heads of state from around the Eurozone, of course Greece as well. And basically the situation at the moment is that Greece have got a big payment to make, over €1 billion to make at the end of June, on the 30th of June. This is due. If they can't make the payment, then basically they will have defaulted, and then that will probably begin the steps to them leaving the Eurozone. So basically we've got little under, well, just over a week, in fact, until that time comes. And the question now is, can the Greece do a deal which means that they get extra funding from the IMF and the ECB and the Eurozone to cover that payment, so you can kind of kick the can down the road and keep things going for a few more weeks. So that's the question. Now, the problem with that is the IMF particularly being quite strong with Greece. They want Greece to implement all sorts of austerity measures, which of course the Greek public have already proven that they don't want. Recently, a few months ago, they voted in Syriza Party, who are of course anti-austerity and are now leading negotiations with IMF and the ECB and the Eurozone. So you've got this situation where you've got these two parties. One does not want austerity, the other one does want austerity, and all hinging on that is basically what's going to happen to Greece. Now, there's lots of different opinions out there. It is looking right now like there's not going to be a deal to do because both sides are too far apart. However, in history, we've seen these type of events unfold. We've seen last-minute 11th-hour deals done. That's the kind of thing that could happen here, but it is now getting to the point where, this is it. There's no more real room to go. They've got to make a decision. Something's got to happen over the next week or two, and determine the fate, if you like, of Greece and its Eurozone membership. So that summit's going to take place at 6 p.m. There'll be 6 p.m. is when it's really kicking off on Monday, and basically all eyes on the wires, all ears on the news feeds, because we want to keep a close eye on what's going on, what's being said, what progress is being made, because basically this could dictate price action for the rest of the week. Now, my personal stance is to avoid euro-dollar or the euro currency until this whole drama is put to bed, either whether Greece stay or whether they leave or a deal is done or not. Whatever happens, I'm personally avoiding the euro until a settlement is resolved one way or the other, because it's just too volatile, basically. So that's the situation we've got. That's the biggest risk event of the week. It's the key risk event. It's probably the one that's going to take price action the most, depending on what happens. But of course, as we stand right now, it's very difficult to determine what will happen. So we'll just put all eyes on that and make sure you've got your ears to the news feeds, so that you're aware of anything that does happen pretty much instantly. Now, again, on the Monday, you can see you've also got existing home sales from the US. US data is important, the Fed are data dependent. This is expected to come out slightly higher, which is good for the US dollar. Now, I'm not expecting any major reactions on the US dollar off this, but I'm expecting the US dollar to be supported as we go through towards another NFP in a couple of weeks' time, another major data point. We've got one more major data point this week from the US, which we'll go over in a moment. But other than that, I'm not really expecting too much of a move from existing home sales, unless we get a major deviation. Obviously, if there's a big deviation, the dollar will go up or down depending on what the deviation is. But from here, I'm not really expecting this to be a massive market mover. If we go to Tuesday, June the 23rd, we can see we've got data from China, HSBC Flash Manufacturing PMI. Again, it's expected to tick a little bit higher, still below that key 50 level. Not really a market mover at the moment. The Aussie dollar is probably the one currency that usually gets moved by Chinese data. At the moment, that's very central bank driven, so not really seeing Chinese data have too much of an impact, and I expect that to continue through next week. We've also got flash manufacturing PMIs from Europe. We've got German, French, and the Eurozone as a whole manufacturing PMIs coming out. Again, Europe's in the middle of its QE program. I'm not expecting this to have any significant impact on the price of the euro. The euro is being supported right now. I think it hit 114 last week. This, of course, goes against the long-term trend. We're still thinking that the ECB's QE program will have its impact, but in the short term, as I mentioned, a few minutes ago, the volatility is causing euro, big moves on the euro, and it currently sits just below 114. Now, when this Greek drama is resolved, one way or the other, over time, I expect the euro to keep falling, particularly against the dollar. But for now, like I say, I'm avoiding that pair, and I'm not really expecting this data to have much of an impact. Later in the day, we've got FOMC member Powell speaking. We've also got core durable goods orders from the US. Again, these are expected to come out pretty big compared to previously, minus 0.2 last time, plus 0.6 expected this time. Again, expect this type of data to support the US dollar. I don't expect any major sell-offs to continue after what happened the last week or two. But, again, it was all data dependent. If this data all keeps coming out really bad, we could get that. But as long as it comes out as expected or slightly better, I don't really think there's going to be too much of a problem, with these data points and with this speech here. I think you're going to get more of the same of what we've already had through the last few weeks. I'm not expecting any major surprises, any market moves. If we go to Wednesday, June the 24th, we've got German IFO business climate. Again, it's a European data point. Lots of volatility on the euro right now. I'm not really expecting this to have a predictable impact on price action. I'm avoiding the euro. We've got final GDP. This is a big one from the US. It's the final figure, so it's not too. The figure's kind of known. We've had the previous two readings already released, so it's not much of a massive deal. However, obviously it's GDP, it's growth. If there's a deviation, we could see an exaggerated reaction on the US dollar. We're expecting it to come in better than previous, minus 0.2. Previous is minus 0.7. If it comes out 0 or above, i.e. not negative, that could be really supportive of the dollar. Because obviously the market's viewing the dollar as the strongest currency overall. They're the ones that are going to hike first. So if we get good readings on the big three, GDP, inflation, those kind of things, it's going to have an impact on the dollar. So I think if we can get above 0 or 0 or above on this reading, that could be quite positive and could give the dollar quite a lot of support. If we go to Thursday, the 25th of June, we've got unemployment claims from the US. Again, these come out regularly. It's expected to better. All the dollar data pretty much this week is expected better. But I'm not really looking to trade any of it because it's not really massively market moving, of course, unless we get significant deviations. And then later in the day, we've got New Zealand trade balance. This is expected to come out slightly worse than previous. And again, that matches the overall view on New Zealand dollar. RBNZ's in a rate cutting cycle. New Zealand dollar's been in quite a lot of selling pressure. We had the GDT prices at the global dairy trade auction negative again recently, last week or two. So again, all the things point to a selling of the New Zealand dollar. So we could expect the Kiwi to actually sell off into this trade balance figure. You could trade into the risk event if you want. You could sell New Zealand dollar into it. However, I think there could also be a little opportunity to trade out of it, depending, if we get a deviation, definitely. But basically what we're looking for here is we're looking for negative reading. We're looking for this to come in worse than expected to keep up the selling pressure on the New Zealand dollar, as we've seen over the last few weeks. The final day of the week, of course, is Friday. We've got Carney speaking from the Bank of England. Not expecting to say anything new. We want to see comments about when they're going to hike, basically. And at the moment, they're waiting for inflation. Inflation, as I've said over the last few weeks, Bank of England expects inflation to tick higher since May. So from May, they expected it to go negative in May. And then from June, July, August, they expect inflation to start ticking higher. That happened in June, a couple of weeks ago, or last week or the week before. We had a reading from the UK which showed UK CPI ticking higher. It was back into positive territory, which is what the Bank of England are expecting. If it keeps going that way, we'll still think the bank are going to hike early 2016, but of course it's massively dependent on those CPI inflation readings from the UK. The one other thing we do have from Japan is the core CPI. This is expected to come out at 0. We've got the Tokyo core CPI at 0.1. Again, the target from the Bank of Japan is 2%. It's nowhere near that at the moment. Will they add to their QE program? Other figures from the economy have been quite positive, shown an improvement. However, CPI still on the low side. They've put their forecast back a little bit, but I still think through this any point now, I've been looking at this since March. It's impossible to say when, but I do think there will be a time when the Bank of Japan will probably add to their QE program just to try and really ramp up this inflation figures and get it, heading a bit faster towards its 2% target. So, going to be interesting to see what comes out here. If it comes out in line with expectations, it kind of buys a little bit of time, but ultimately it's still pretty low. If it comes in below 0 in a negative reading, surely the Bank of Japan have got to act. So over the next 3 to 6 months, it could come at any time. You want to keep your eye very closely on the Bank of Japan monetary policy meetings and rate statements, etc., because those will be the times when the bank announce any extra QE. So that's, although it's only a medium and low impact here, it's actually a pretty big one, depending on what the figure is, because this will dictate what the Bank of Japan do over the coming months. So overall, fairly quiet week, not much going on, with the obvious exception of this huge Greek drama that we've got going on. The markets could literally be going either way by the end of the week. All eyes need to be kept on the Greek situation. What happens? What will the IMF do? Will there be a negotiation? Will there be a last-minute deal? Or will Greece nosedive out of the euro and into further economic turmoil? That's the question everyone's asking. It's impossible to say what impact that will have on the euro because the market could take it either way. The market could either view it as a good thing because Greece is a burden, and they could see if Greece is gone, that could actually help improve stability in the eurozone and the euro could rally. Or on the other hand, of course, they could say, if Greece goes, who is next? Maybe Italy, maybe Spain, maybe Portugal. Maybe these guys will start to crumble as well. And if that happens, then of course the whole thing unravels and the Eurozone project as a whole comes crumbling down, basically. So this whole concept of the Euro project being irreversible comes under threat, in which case the Euro will dump and drop significantly. So it depends which way the market's viewing it. At the moment, the market seems to be viewing it as a positive thing, but that could change depending on what the consequences could be as the details of any potential Greek default emerge and become clearer. So it's basically very, very difficult to predict. Like I say, I'm avoiding the euro currency at the moment. It's very, very volatile. If you are in it, pay close attention to what's going on. Take care. And if you're not, there's a couple of risk events this week, particularly from New Zealand and the US, that we could possibly look to trade. But generally, I think most trades are going to come from sentiment. Watch the news feeds.